Hi, everyone. How's everyone doing? Everyone doing okay? Hi, Ren, Brock, team. How's the best team on the net doing? How's the best webinar on the net doing today? Okay, Bill, Amira, Brock. I feel like the dollar. And I'm going to touch the blue line. I feel like I'm going to touch a blue line that, I've had drawn for a long time. Here we are, getting closer. Kind of ugly readings on RSI, 22 on the daily. I'll feel like Bitcoin in a few days. No divergences. That's a good one, Brock. Nothing much on the 2, nothing on the 1. How about the 15-minute? Not even the 15-minute. So you got to buy it. There's confirmed lows everywhere. Anyway, so looking at this cable, tricky little bastard. I thought this was a stop hunt and then sold a rally, got taken out. Then we had this, now we have this. Euro, we're getting close to some objectives, but, I can't sell it. CAD is a little interesting here at 29. You see this, we're not confirming now on the 2-hour or the 1. But you know what, guys? Here's what I say. Don't do anything new today and pair positions in front of NFP, and then get ready with levels for after the reaction of NFP. Okay, now I usually say don't try and make your week on Fridays, but it's an exception when you have NFP on Friday because we could get, it really hasn't been a big market mover for a long time, but perhaps it will, and be ready to react to the reaction. I know a lot of people think that the metals have bottomed and, they're acting okay, but we're right back at some pretty significant resistance here. Look at this. And if I move the panelists out of the way, this was a big breakdown area, this 1850. Let me go a little longer term. See all these lows here. So we're almost there, right around 1850. And actually gold is a little stronger than the silver here today. Although silver has acted okay. In fact, it looks like the gold silver ratio, um, is trying to wash out again after this break. So when I'm in an I don't know mode, I don't do anything. Something that has happened this week is, 10-year yields starting to approach that 1% level again. But, I could also see this being an A and this being a failing rally, and maybe we get a C again. But, I've been saying for a while, I just don't see anything that bearish about this. Do you? All we have is little pauses, right? Had this little pause, right? Had this little pause. We didn't even get to the confluence of the moving averages here. I'm just wondering how different markets are going to handle a breakout over 1% yields, because, it could go 130, could go 150. So I think this is not a story yet, but will be a story. It's hard for me to believe it's not going to have an effect on valuations, that maybe higher yields might help put in a lower low in metals. unless you think this was it. Unless you think this was it. And I think you're going to have to think silver's okay if we start closing back over 25. But there's nothing that compelling in front of the NFP that I want to do today. But I'd lean more towards selling a rally in gold, right back at, old support is new resistance, isn't it? Isn't that trading 101? I think it's trading 101. So, I mean, here we are, pretty close to it, right around 1850, which we didn't quite get to. So, I mean, this might be a fade candidate for me tomorrow, the metals. And let's get back to S&Ps. One thing I have to say about the S&Ps, and you guys know that once we started closing over 3620, I pulled in my bear clause and I said, unless we take out 3600, this little breakout area here, right here, that it held on, I think it was Monday or Tuesday, it held it. It was Monday because Monday was a pretty good day for me. But look at this now on the daily. So now we don't have confirmed highs on the daily. We did all the way through this. Yeah, EG is pretty wild too, isn't it? So Blake said over 90, it's going to look pretty good, and it did. Got to 90.88. I still think it looks good, and this is probably a pause day. But I wouldn't want to see it close back under 90, 89, 80. Okay, because we got through 91 and then you're going to have, 92 and a half. So it still looks good, even though this is, it's been pretty wild. You get these little candles that make you think it's really not happening. But then you have this. They're talking about a compromise on fish. Well, heck, Sansi, I'm going to have a tuna fish. I'm going to make some tuna salad then. It's hard to believe that, that countries are having, a big argument about fish. Anyway, don't be a fish. And in fact, fish are good to have. In fact, if you come across any, first you catch the fish before you clean them. Okay, so just something to keep in mind. A priest told me that. So we're all fish. You're a tadpole, Sansi. So looking to be a shark tomorrow on NFP. Who's had a good week here in FACE? What was it in? We have a couple of minutes for bragging. Anyone want to brag? Not bad, Didier? Good. Good that it's not bad. Who else? Come on, there's lots of you. Everyone's sitting on your hands, so positive overall, Bill. Great. What's on your radar, guys? BitKill? Bitcoin did well. Good, Brock. So is a massage, Sinatra. Informative and enjoyable. All right. Well, anyway, good to be back. Yeah, crude still looks okay, Georgie. And I'm going to get Blake on now to do his thing and update everyone's bias chart. And we have Joe Friday with us today, Ben Maldonado tomorrow to wrap up the week on NFP. I'm keeping my powder dry until tomorrow. OPEC too, huh? Okay. All right. Well, I'm glad that if you had a decent week, you may want to peel off a few pips and be part of our community. Hang out in members chat with some excellent traders. Anyone feel like stepping up and doing that today? If you want to do semi-annual, email Jay Perry at forexanalytics.com and say you were in face today, and Joe will work with you. Good morning, Blake. How are you, buddy?
Whew, good. A little hectic around here. I was just the euro just spiked up to the 78% retracement of this
Whole thing.
Yeah, I mean this is a big, hold on really quick. Let me take over really fast. Can you guys see my screen?
It's coming up.
All right. Can you guys see it?
Yeah.
Okay. So I pulled up the euro on a different feed because I wanted to be able to draw a little bit. So you can see the euro just raced up to this is the 78% retracement of this whole move down. Now, I'm not going to sit here and say the euro can't go higher because I truly believe the euro is going higher. I really do. I think the euro is going higher. It just may stop here temporarily for today. This, and let me explain why here just a second. First of all, it's a 78% retracement. 78% retracement. You just have to respect it on a long-term basis. We've had a really big rally since we broke through the 119 level. We've run up 250 pips. Daily relative strength is divergent. That's not saying that we can't, we could race higher here. I mean, we could actually go to like 124 and then relative strength might not be divergent anymore. You know what I mean? So it's just divergent at this moment. And we've had a really big run. And there's a couple of currencies that haven't really broke yet, which I'll talk about that obviously when going through our bias chart. But I think you have to be a little careful up here. What I'm hoping happens today, this is what I hope. And don't get me wrong, what I hope happens and what does happen is completely two different things. I hope for a lot of things, but I hope I'm going to make $1 million today. That doesn't normally happen. So I'm obviously I'm joking around. It's I sit here and I can imagine things happening. I just hope that this happens to give us all opportunities to be on the long side of the euro. Again, whether we get a pullback to 120 or not, I think 120 would be a little bit of a stretch actually if we came all the way back down. Sorry, I didn't mean to yawn. I didn't sleep well last night. Last night was one of those nights that I was so tired and I laid down and 2 or 3 hours later finally fell asleep. I don't know why that happens sometimes, but it does. Anyway, I'm hoping the euro at least consolidates here before attacking new highs. And let me explain to you why I think that it's possible that we stall here. You look at currencies like the dollar Canadian. The dollar Canadian is barely breaking lows, right? You look at the dollar Mexican peso, it's just today probing lows, like new lows. And by the way, if you use, obviously if you use Forex Analytics, you got notified just when it broke through 1995 an hour ago. You can see right here. US dollar Mexican peso probing the 1995 level and could trigger stop loss orders below, sending the pair below 1990. I shorted the dollar Mexican peso this morning. You can see what happened. It went bloop. I didn't make as much as I think I could have, but still you saw you see the move here. Okay. But these currencies, what I'm trying to explain is that there's some of them that really haven't moved. Now they could play catch up. Like we could see the dollar Canadian maybe play a little bit of catch up here. Yeah, that's possible. The cable hasn't broken out. Now, there's a lot of news regarding Brexit and what may or may not happen over the course of the next, few days. The thing is we haven't got the green light yet that Brexit is going to happen. There might be a deal this weekend. You know, Amanda was in our chat room earlier saying that, you know, uh, uh, we have to uh, wait for the IMB, which will be back in the commons on Monday. And you know, there's a few things that loose ends that might need to be wrapped up before we can get a Brexit announcement, which if that's the case, you know, maybe the pound does stall here. Now, just and just for the record, and just so you guys know, I do believe the euro is going higher. I do believe the cable's going higher. I think the cable's going to break this descending wedge, this major descending wedge. I just don't know if it's going to be right at this very moment or today, right? After having such big moves. But you know, this ascending wedge in the cable is a 2008 to today 12-year in the making move. Okay, we're right there. I mean, you know, it's capable of breaking out. Again, I don't know if it's going to happen at this moment. I just think it's possible here, you know, today or here in the next, you know, week or two, especially going into year end. But let's talk about let's kind of get our analysis done. I've got to get our bias chart done for the day. If you guys are new listening into Forex Analytics or the FACE webinar, we put together a bias chart every day, and the bias chart goes right here on Forex Analytics, inside Forex Analytics, but I help build it with you guys every day. The reason why is this is telling you where the key levels that we need to be aware of are every single session. That doesn't mean we can't break them. That, you know, it's just, you know, usually it's where we might hit like a stall point. Like, for example, the euro dollar, we wrote, this is early yesterday, right? 121.20, it was like 24 hours ago. We basically ran up to 121.10. This is, you know, if you look at 24 hours ago was right here. Let's see. Right here. This is, we were broadcasting right here. Yeah, right at this moment. Oh, I'll just put it right here. Actually, the hour before. So we were right here. And yesterday afternoon, we basically hit 121.20 and then we stalled. And then we stalled there all night. And then you can see the breakout today. So you can see these bias charts that we build are pretty important for what we do on an intraday basis. That doesn't mean you should automatically short here, or it doesn't mean you can't short the euro dollar because it says bullish, excuse me. But what that does tell you is, you know, the bias is higher, so it's probably better to buy dips than sell rallies. Or if you're going to sell a rally, sell it in small size versus larger size. So that's what we're doing on the bias chart every single day, and that's why I'm going to help you build it right now. So today, resistance 161.68. Now, if you don't know, whoops, did I say 61.68? Sorry, my bad. 21.68. Why is that a big resistance? Well, you know, that is the 78% retracement of $2018 high, right? The 2020 low comes in at 78% retracement, comes in at 121.68. I'll write 68, but it really is, you know, you could say 60, 70, you could, you know, whatever. I mean, because support and resistance, as you've heard me say many a times, it's not an exact science. And if it was, we'd be gazillionaires because you would know exactly what number to pivot off of, but it's just not. It's a range. So around the 2160, 2170 level is going to be resistance for the euro. Now, I do expect dips to be very short-lived. So if we can get a dip down in the euro to like right here, to maybe 120.85, that's probably going to be great. And we have a bullish bias. Now, the cable, I shouldn't really have to write this too much, but this is the recent high in the cable. Okay. And that comes in at, actually it's 89, I think it is. So I should probably adjust that number. 80, what's the high there? 80, 83. So I'll just keep it at 80. So 134.80. But why is that so important? That's because that is the multi-year trend line. Whoops. Multi-year ascending or descending wedge reversal level, horizontal resistance. It's all big around this 135 level. So because of that, you guys know it's there. Be really careful unless we get a news about Brexit's happening and deal's been struck, and then we're probably going to race up to 140 really quick. Whether or not we can sustain those gains is something else, but I think we could probably squeeze pretty aggressively towards 137, 130, 139, 140, somewhere up there. Support as what did we write down yesterday? 132.80. What was the low yesterday? Remember, think about this, guys. This was I don't know what my dogs are barking at early this morning. It's dark outside and my dogs are barking, trying to wake up everybody in my house. We were broadcasting here yesterday. We dropped. We came down to 132.89 yesterday, 88, and bounced like a bat out of hell. So if you were here yesterday, you knew how important 132.80 is. So as long as we're above that, no reason to be bearish. I think right now you got to, err on the side of bullishness. Are we at resistance? Yes. Should you be very careful up here? Absolutely. Okay. So Aussie, the Aussie is struggling up at this is the high from this is the range high 2020. Now look at this 127% extension of this move comes in just above these highs. It comes in at 74.50. Now wouldn't this be a hoot? Because a lot of people, believe it or not, there's a lot of traders that they don't look out more than a couple months. Most traders are, believe it or not, they're viewing this, right? This is what they see. What they're not viewing is that because they're lazy, they're not willing to go out on a daily or weekly basis and really look far out. I mean, they could go to a daily chart and say, well, I'm looking at the last couple months worth of data. Yeah, it looks really bullish here, but people fail to say, oh crap, if you look at the post-COVID lockdown move, we're at 127% extension, and that comes in right above range high. So then what happens is you get all these traders that do this. They see this, right? And then they say, oh shoot, we're breaking out. And then what
instead
happens,
of running into long-term resistance because they don't go far
exactly
enough left.
And then it smacks them upside the head, Dale. And what happens? They go, oh crap, why did we turn? Why did we get a false breakout there? You
need a telescope and a microscope in this business.
You have to sometimes. And I'm not saying that's what's going to happen today. I'm just saying that you have to be aware that 74.50 is a resistance level, and you have to respect it. Just because we're trying to break out today. So I'll flip it to bullish today, but tomorrow we could go right back to range, because today is at risk of doing a false breakout, especially with the euro stalling at resistance here. Again, I'm not saying that it's going to happen. I'm just saying that it's possible. All right. I still think that this uptrend line is important, which makes this hourly support pretty important. 73, let's call it 73.40. Okay. Oops. Kiwi. And if you guys are logging in for your first time, which probably isn't a lot of you. I know a lot of you guys have been listening to me for 10 years, maybe longer. Some and I'm going to talk about somebody here in a second. Like Amir, who's in our chat room. I've known Amir for about 15 years. And let me tell you something. He is going to be a guest with us a week from Friday. For those of you that, and I know there's a lot of you in our chat rooms right now, and you're like, oh yeah, I see Amir in our chat room. So why is he such a big deal? First of all, I've met Amir and his wife. I've met April twice, years ago, maybe 12, 13 years ago in person. I've met Amir in person probably 6 or 7, maybe more times, back before we had webinars and stuff, where I used to actually have to fly out to a city to teach people how to trade currencies. And he's been in our chat rooms ever since. Amir has been through hell and back. I will let him explain to you his story a week from Friday, but he is a person that has been a huge, huge character and person and trader and friend and supporter of mine, and who I've been associated with for the last 15 years. And he's got an amazing story about perseverance, about somebody who has been through hell and back and has the most amazing story as a person, not only as a trader, but as a person. So you guys, I'm going to write down the same numbers as yesterday here. I'm going to kind of do this as I talk. You guys have to be here next Friday for Amir's interview. And Dale and I will both be here. But I'm going to tell you guys, he's, I'll put it to you this way. Most human beings would have given up if you've gone through what Amir's been through. And for those of you that are in the chat room and you don't know his story, you're going to be probably shocked,
inspired,
and shocked and inspired.
Yeah.
And it's pretty cool.
David's a fan. David Ogles is a fan of Amir.
You know what, Dale? This is
they all are.
2020 has been a hard year for a lot of people, right?
Oh yeah.
It's been a crap year for so many people. I mean, Amir, for I want to say a couple years of his life, he lived through what would be 10 times worse.
Yeah, the pandemic was a walk in the park for Amir.
For him, I bet it was a walk in the park. He's like, hey, you guys are a bunch of sissies, But I'm not. All jokes aside, it's like I go back to his story, and you guys should know this story. And it's just he's an amazing human being, and I'm happy to bring him on because I think everybody needs a good story about perseverance, a real story about perseverance.
I have one about perspiration a little.
Yeah, I bet you do. All right.
I got cold sweats. All right.
Dollar Canadian is slumping towards support. I think we're going to find pretty big support down here at the 127% extension. This is a 127% extension of this move, the summer move, and then also the most recent bounce that'll take us down to 128.70 ish. Resistance right now is going to be back at 129.80, or you could just really say 130. I mean, while we're below 130, you got to imagine that it's bearish right now, but man, you have to just be a little careful as it's kind of like the
like we have jobless claims in 30 seconds.
Jobless claims, you know what? They can stick those jobless claims right up Stelios's wanker. What? Joking. Sorry, Stel. Thank you for the heads up. All right, so let's figure out what the weekly jobless claims are coming out at. Here's your buy. This is data flash that comes with Forex Analytics with your subscription. And then also here's Bloomberg, which is the $2,800 option that data just came out probably just as fast as Bloomberg. Oh, look. Oh, it actually beat Bloomberg. You just saw it pop up there. Woo. glad I paid $2,800 for that every month. That's nice. Okay, so dollar yen, better. It's up a little higher on stronger numbers. So less jobless claims. That's good. Remember, we have tomorrow's non-farm payroll. Tomorrow's going to be a big deal. And by the way, thinking about that, before I go into further analysis here, tomorrow is non-farm. If you're short the dollar because you were really bullish the euro on this breakout above 120, wouldn't you want to pare back a little bit ahead of the jobs report? I'm just saying. I mean, knowing there's a big piece of data, and just so you guys all know here, I believe that macro is going to matter going into 2021. Do you think I'm off base by saying that? I don't think so. I think 2016 to 2020 has been really more worried about what is the president of the United States going to tweet today that could really derail what I'm doing. And that's really been the case over the last 4 years. Obviously, we've had, we've had a trade war, we've had coronavirus, we've had, stocks rallying to all-time high. I mean, there are macro things that move the market, but really, if you're an institution, putting big money on the line in the currency market has been a very difficult task over the last several years, because you could be in a trade and get your morning tweet that completely derails anything that you were doing. So I do think that going into next year, you remove that risk out of currencies, and what you're going to get is you're going to get a market that really starts to move on economic data again. And so there you go. Amira asked, where is Amir from? Amir is from, well, he lived in Baltimore, Maryland, but originally he's Iranian. His wife is, she's a New Yorker. April, she's a New Yorker, but he's Iranian descent, but he had a couple, I think he lived in Baltimore at the time. Now he lives in Georgia. He moved to Georgia, and he'll tell you his whole experience. But when I met him, he lived in Maryland, and I believe he had, and he's going to have to clarify this, I believe he had a couple car dealerships. This is 15 years ago. So anyway, all right, back to analysis. Sorry, I got to finish up here. Hold on. Back. Okay, let's finish this up. I'm going to do this really quickly for you guys. Dollar, where am I at? Wait, I just did dollar Canadian, dollar Swiss, dollar. Okay, let's do dollar Swiss. So the Swissy is broken down, obviously. We are below 127% extension. Could we head all the way down here to the 88.50, 161% extension of this move? Yeah, possibly. I'm going to also go back and do this. We're at the 127% extension of this move. So we may actually stop here at 89 cents. Now, any rally back to 89.90 should be sold probably if you're going to continue to trade with this trend. But you can see any rally back here should be find sellers now. Move this out of the way. So if you get a move like this, you should probably want to be a seller up there. We're pretty oversold. Look at intraday. I mean, that's do you really want to get caught shorting down here with look at the 4-hour RSI. You're borderline really putting yourself at risk here. So US dollar, Norwegian krona. Now we have a big double top that we're playing out. I do believe it goes lower, but I really think that we could rally back to 8.95 first before selling off. You can see every move that we make lower is divergent and it's met with buyers. So I wouldn't be surprised if we rally back here first before selling off again. So support 876 right now. For now. 896. Wait, is it 896? Yeah, or yeah, it is. It's bearish. Okay. Dollar index. Okay. So dollar index keeps on going. So resistance now should be 91.18, then 91.50. I'm going to write down 91.50 because I think that even in a bounce up to there, we have to continue to stay bearish. Where's the next support level? It's a good question. We're below the 127% extension of this move. I mean, next support doesn't really come in until 90 cents. I hate to write that down because it's so far away and I really doubt we're going down there, but I'm going to write it. I just, again, I don't think we're going all the way down there today, but I may be wrong. Markets definitely does things and surprises me all the time. Dollar yen, we're at triangle support here. You guys recall, this. I mean, it's a rough support, but you guys know I am really not a fan of trading the dollar yen right now. 104 is support currently. We have further support at 103.85. I'm just going to write that down. Well, I mean, we're at 104, so you guys can try to short it here if you want. Resistance is 104.75. And you guys know I'm not trading the dollar yen. I have no desire to trade the dollar yen. I don't know what moves it. Sometimes I think it's yield. Sometimes I think it's the dollar. Sometimes I think it's yo mama. I'm joking.
What do you say about my mama?
You want to do some yo mama jokes, Steve? Yo mama. So I'm just kidding. Okay.
It reminds me of probably the funniest scene of the movie. The Eddie Murphy one, Professor Clumsy.
Oh my God. Are you the only I think you're the only person that ever watched that movie.
That he goes in the bar and with the lady and it's
Nutty
the comedian.
Professor.
Yeah, Nutty Professor. Yeah,
That's the one. That's the one.
And actually, you know that the guy that plays the comedian there is Dave Chappelle.
Yeah.
And he starts the mama jokes.
Yeah, the mama jokes are always fun. Those are always fun as long as you are with somebody that doesn't get really irritated about those. Some people really take offense to those. I've tried it at the bar a few times. No, mama. So, so S&P. Look at how we're just wedging up against these highs. I mean, I know everybody and their mother's brothers, uncles, itching to short the S&P, but I mean,
not me.
Yeah, I mean, I don't think there's any reason to right now. So let's write down 35.90. What is this? 36.70. It's still bullish. Right. I think those are the same number. Ooh, shoot. Hold on. Let me grab that. Hold on. My bad. I think that was the same numbers from yesterday. 36.80. Why would I have that? 36. Oh, I think I marked up the exact high. That's what I did. 36.80. And we were talking about if it did break higher. I remember our conversation yesterday. If it did break higher, because we're just right up there. The 127% extension is 37.53. That's why we wrote that number. So I'm gonna go ahead and 37.53. What else am I doing? Oh, okay, gold. So gold. Oh, look at that. What a rejection, huh? Gold. Let's go over to gold. Oops. Yep, gold. We had no idea that we were going to have a problem here at 1840, right? boom, 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 knocking our head up against the resistance. We could make it up to 1850, but 1840, remember why this is a big deal is because it's a 38% retracement. It was the 38% retracement of this move. And we were like, man, when it slips through 1838, we're going to see a sell-off. And yes, we did. Now we're back. 1850 is that previous support here. So that should be resistance now. And I'm still going to put us in a range. I'd put us in a range because I think we were in the range yesterday, but we were bearish for a few days there on the breakdown. But now support should be back to 1816. And there you go. I think we're done. Stelios, you can go ahead and take a picture of that if you want.
Stelios won't take a picture of that. He just wrote that his internet went down.
Oh, so let me take a picture of that. I'll take a picture of that. So Stelios's internet went down. That's what happens when you don't feed the internet gerbils.
Yep.
To Richard Gere. Oh, did I say that out loud? I did.
Oh my God.
Oh, that.
One of
Dale
these
knows
days
what I'm
we're
talking
getting
about.
banned.
All right. So,
I doubt
Steve, how you doing today?
Good, Blake. How have you been?
I'm tired. And I can complain because it was one of those nights I was so tired last night and it took me a couple hours to fall asleep. I don't know why,
It happens on occasion.
I know it's so annoying when that happens. I'm like, I know I'm tired. I'm so tired. And why can't I fall asleep? Anyway, other than that, doing all right. I mean, we're seeing a little bit of volatility here. I like where the euro's at. I think it's bullish. I think dips down to 120 should be, bought if we could even get down there. I don't even think that's possible at this point. I just think that right now, we'd be lucky if we got a dip below 121. But remember, non-farm payroll is tomorrow. So you have to be really careful with the jobs report. And I need to reiterate, Amir from our chat room is going to be with us a week from tomorrow. If you do not know who he is, if you're not familiar with who he is and you're in the chat room, you got to listen in. And if you don't know who he is, and just in general, and it's a person that I've known, a trader who's been in our basic community for the last 15 years, maybe 14, maybe 16, somewhere in that neighborhood. It's probably one of the most inspiring stories that you're going to hear. I mean, like I mentioned earlier to you guys, I don't know how, as a human, I don't know if I would have made it. I just don't know if I don't know if I would have made it through what. And I am a pretty strong person in my view. Things roll off of me. I'm a ex-Marine infantryman. I don't get shaken by much, but looking at what has happened in his life, I don't know if I could have done it. And I think it's an amazing story. So you guys have to be around next Friday. All right. With that being said, Steve, I'm going to pass it over to you. I'm done talking, and I'm sorry. I spent a lot of time today jibber jabbering. So it's all yours, man.
Thank you, Blake.
All
Good
right.
luck today, Blake.
Hey, good luck, guys. Have a great day. And remember, try out Forex Analytics. It's $1. Try it out. All right. See you guys.
And there is a
Bye,
free
buddy.
way you can get Forex Analytics. As we've said before, if you go to the Forex Analytics page, go to Forex Analytics Sponsored, and you open an account to Pepperstone through this specific link, then you get 2 months of Forex Analytics, and when you do 5 lots of trading, you get another 2. So it's a very easy way to get 2 + 2 months of free premium account in Forex Analytics. Okay, how are you, Dale?
A little better.
Good. Good. So,
I-
any specific requests?
Yeah, your take on what's happening with yields. Are you becoming more constructive about higher yields, or is it still neutral to you?
I don't see anything impulsive in this move higher in yields. You can see it yourself
Okay.
here on the
Yeah.
10-year chart, right? Now, let me make it very clear and very specific. If they let bonds trade somewhat freely, yields
Okay.
should explode higher. You know what I mean?
Right. Right.
Just to put it in simple context, just look at the depreciation of the dollar that we've had so far.
Yeah.
We're very close in hitting three-year lows in the dollar.
Right. Yeah.
Just look at the assumption of all major institutions and banks about what the dollar is going to do, and now
Right.
consider this. I'm not saying that because now we have most major institutions waking up to what was an obvious fact, in my opinion. We've been saying that for more than a year. But think of it as this. Imagine anybody that wants to get paid, let's say 1%, at a promise that promises to pay you back in dollars, when everybody believes that the dollar is going to depreciate a lot. So basically, the very little you get paid, which is negative actually, if we're talking about real rates, right? But even the nominal rates are extremely low. You get to lose most likely a lot more than that just from the dollar devaluation. So who would really want to hold these pieces of paper, these IOUs, right? Nobody.
Yeah.
So that's why the Fed had to fully monetize the previous stimulus package. That's why the Fed is going to have to fully monetize the next stimulus package. And that's why we're not talking about exploding yields, simply because these bonds are not being bought by the market. So we don't have a normal equilibrium of demand supply that would force yields to be at a level that would actually make sense in taking the risk of buying these bonds. So, trying to make fundamental analysis of the move of the yields when we know that it's not a freely floated instrument, I think it's the wrong approach. That's my point.
Okay.
At some point,
It's a managed market. Yeah.
it is a totally managed market.
At some point, will the market be bigger than the Fed?
No,
and what would be the tipping point?
First of all, you know that the Fed now has a record ownership of treasuries, right? And do you expect this to change or to accelerate? Because we both know the answer to that, right?
Right.
So basically, the more of the market they own, the less this will be an actual market. Now, at some point, I'm expecting that there's going to be a big rout that they're not going to be able to hide, but we're not there yet. We're not there yet. So for the time being, I think that this move is orderly, and they'll do whatever they need to do to keep it.
So it'll probably be when the dollar decline becomes a waterfall.
Yes.
Instead of a stair-step decline.
Yes.
Okay.
Yes. Exactly.
Thank you.
So speaking of the dollar, and it is important, the dollar broke through another confluence of supports today. So far, it has been breaking and is trading below. We confirmed that the next move lower is the next target lower is somewhere at 89.30. So just keep that in mind, right? And if you remember, everybody's looking for some type of a reversal. I've kept saying that until you actually see a reversal, don't try to fade this move. Really don't. Euro USD has cleanly broken higher. USD Swiss, the floor has dropped here, and the USD Swiss's formation was actually even more clean. You can see it here, right? A descending triangle. We sliced through the trend line support, and I think 87.40 is the next downside target. Bottom line, whatever I look at, and it's dollar denominated, almost everything looks really, really, really bad. So, I find no reason why somebody would want to fade these trends. Now, yes, at some point when we get some risk off move, the dollar will catch a bit. There's no question about it, and some of the weak hands will have to be shaken off. But do you look at these charts and see any indication that that's about to happen? No. So keep on the course, right?
Yeah. What's your feeling on silver after this rally? It's under some pressure today.
It is under some pressure, but I think the reversal we had higher is, quite a strong one. So I think that it's worth trying to buy the pullbacks. I mean, the short-term pullbacks from here. Let's have a look at it on the 4-hour chart. Here it is. So,
I see. Back to the wedge line, maybe.
Yeah, anything like this, right?
Okay.
I think
Yeah.
should be bought.
Okay. And do you think that was it in gold too?
If it's
The low?
if we've seen the low in gold or silver, we've probably seen the low in the other one as well. Having to do with gold, I think this 1815 area should be support from this point on. So let's see how this reacts. But I think it's very likely that we're going to see something like that.
So metals bottomed this week.
Nobody can say with certainty, but I think it's a very high probability scenario. Yes.
Okay.
Yes. Now, we might get lucky and get another push lower, but I don't feel that lucky.
Okay. All right, buddy.
Copper, by the way, just look at the strength here, right? Yesterday it was looking like we would have a very negative day. By the end of
silver.
By the end of the trading day, they had actually pared back almost all the losses. We closed almost unchanged. I mean, it's unstoppable. And almost everything is unstoppable. Anything that has intrinsic value. Look at platinum. Platinum is attacking the 1041 level. I think platinum is going to explode higher. Probably we're getting very, very close to that. Here is nickel, also rebounding nicely.
A lot of our viewers probably don't know that for years, platinum traded at a pretty big premium.
Oh, yeah. For the vast majority of time, platinum traded at a very big premium to gold. And then it started giving the premium away slowly, and then it accelerated. Then it was extremely cheaper. At some point, the gold platinum, we kept showing that the gold platinum ratio started making no sense.
Maybe they'll come back to parity again.
I think it's very likely that eventually we will.
Yeah.
Natural gas, on the other hand, deceptively, it was looking like it was consolidating, and it has turned lower from here. So, it's not easy to say. Perhaps we have a little bit of a different formation. I don't have a position here. I haven't had a position since the first move higher there, which I made very good money there. I don't know exactly what's happening here. I remain to be positive in general about natural gas and anything that has intrinsic value, but I don't know. I want to see a little bit more price action. So I'm telling you in advance. I'll keep monitoring this. I haven't felt like I wanted to buy it again. I seriously thought about it when we had this cup and handle formation over there, which I didn't do. I could have made some money there as well. It ended up being a nice trade. We still seem to be correcting lower. I do think that most likely we have seen the low in natural gas as well. So my general thesis hasn't changed. I just want to give it more time and see how it unfolds. What also hasn't really changed here is the fact that crude oil seems to be bull flagging, and I think it's very, very likely that it's going to actually, produce at least one more leg to the upside. Now, when they presented, they lied, wanting to control U.S. inflation. There was something to buy the USD for interest. Now, with the pretense gone. So has the support and the politics are horrible. Hence Bitcoin and gold. Yes, I agree, Richard. I agree, Richard. See where which okay, Euro Kiwi. So yeah, sure. Euro. By the way, one instrument I wanted to talk about yesterday and the day before, but I forgot, is I showed last week this chart saying that Euro yen looks like it wants to probably break higher, right? We had this clearly corrective move, and we did so, right? So this week has actually produced a breakout here in Euro yen, and I think I trust it from a technical perspective. I mean, it looks like the real deal. I mean, this move lower following, this rather sharp move higher, looks clearly corrective to me. So I do think that eventually we even end up breaking through 127. Now, I know that the question was about Euro Kiwi, but I just remembered I want to talk about this. Listen, Euro Kiwi has broken up from this descending wedge. This little descending wedge. Keep in mind that theoretically speaking, the target is a full retracement of the wedge. That would imply a rebound close to 173. And I have no arguments against that. I mean, we can rebound all the way to 173, even higher, and still, just have a corrective rebound and then resume lower. So, as I said, I have no objection to that. At the same time, as I mentioned multiple times, we did get this beautiful bounce from this channel trendline support in the Euro Aussie, and we still have some room to run if we want to the upside in the Euro Aussie without even changing the fact that probably this is a long-term consolidation after a sharp move lower and will probably be followed by another sharp move lower. Listen, let me make it very, very clear. I don't expect that eventually Euro Aussie is going to move to the downside because I believe that the Euro is going to turn really bearish against the dollar, for example. I just believe that as commodities will, since, they tick the box of what I've said before, something with intrinsic value, will have a massive rally. Commodity currencies should do well. So I do expect that the Aussie will eventually do better than the Euro, right? So fundamentally speaking, it's it's totally aligned with my beliefs to see a move lower in Euro Aussie. But I have to tell you that if I had to make an assumption, I assume that both the Aussie and the Euro are going to be rallying against the dollar. I just believe that the Aussie is going to be doing much better. That's why the Euro Aussie is going to be moving lower. Okay. Let me go. Natural gas. Yep, answered that already before saying your question. USD looks least bearish on USD yen. This going to help the USA. Once Persian, always Persian. Yeah, listen, USD yen is really an abomination. I've talked about that multiple times. I mean, this is the formation I'm looking for at the moment, right? I mean, a big symmetrical triangle. We have another triangle within that. Who the hell knows what's going to happen here, honestly? I mean, I look at these trend lines actually, but do I actually want to get some exposure? No, I haven't had exposure in USD yen for years, and trust me, I haven't regretted that one bit. If anybody wants to actually solve the puzzle and try to make money trading USD yen, be my guest. I'd rather make money trading other stuff that are not like so choppy. So I'm keeping a close eye at it. I mean, I'm looking at it like 2-3 times per day, which is more than it deserves, to be honest. But am I even thinking of trading it, as the Fed would say? No, I'm not. I definitely am not thinking about it. Do we have an interview, by the way, Dale, today?
Yes, we have Dragnet, Joe Friday.
Okay. You should have brought Joe Friday on a Friday, I'm assuming.
Well, Joe Friday is Joe Friday every day. He was an excellent guest, so I invited him back.
Good, good,
Okay.
good. So let me see if we have anything else to cover.
Go ahead and
Before-
invite him, Alexander. Michael, if you want. Tell him he could
Sure.
bring the whole cult here.
That's a good point, actually.
Tell him I want
Bitcoin-
I want a glass of Kool-Aid.
Yeah, Bitcoin testing back the highs, but keep in mind, I told you that before, a lot of divergences. I wouldn't be jumping on the cryptocurrency bandwagon, right here, right now. I think it's, quite a dangerous proposition. USD NOK moving nicely lower. Now I have a full position. My cost average is even higher than this. It's somewhere here. So, this has been a very nice trade, and I'm looking to hold it for a, long time to come. Okay, I think I covered
Everything.
yeah, I think I did. So okay, let's get Joe Friday on a Thursday.
All right. And he was an ex-policeman in New York, so
Oh, I remember him. Yeah.
Yeah.
Now that you mentioned it, yeah.
Okay, so Joe, welcome back to Face.
Hey, good morning, guys. How are you?
Good
Good,
morning.
buddy. How's things going in New York City?
Good, good. A little
Yeah.
getting a little chilly here now, but other than that, everything's good.
What's happening COVID-wise? They shutting down the city again?
I think the city more than where I am in Long Island.
Yeah.
You know, De Blasio and Cuomo and whatever.
Yeah. All your
Yeah, they're killing those poor people in all the restaurants and just terrible.
Yeah. Yeah.
Long Island, we're pretty still open, but they're closing some stuff at some of the bars and restaurants at 10 o'clock. And we'll see how long that lasts. They're already having protests out here by people who support the businesses.
Look, you have background in law enforcement, and I'm not sure if you were around. You're on the force in the '60s when things got tense. You weren't.
No,
You were still a baby.
I was still a baby. Yeah.
Okay, so I'm wondering, but with your background, do you think we're on the verge? I have some people in here writing about what's going on in Georgia. Do you think we're on the verge of some really major social unrest here in America?
Yeah,
Is that your vibe?
I've been posting some of my thoughts on that. I think there's a battle going on here between conservatives and liberals,
Yeah.
and the ideology that the liberals want to bring to this country, I don't think is in line with our history. So I think at some point, unless something changes, I'm not going to say civil war, but
How
it's
about
not,
martial law?
yeah, it's not going to be pretty.
Yeah.
And I think when the silent majority, I think most people, or at least reasonably minded people, are believe in the Constitution and all that stuff. And I don't know if they are ready for socialism. And I think there's going to be a big fight if that push comes to shove on that. So
Yeah. We'll
Yeah,
see.
but socialism is a very easy concept to sell to naive people. That's the problem.
Oh yeah, well that's just the problem. And I think the education system in this country is liberally geared, and they're indoctrinating all our young kids, and they're telling them how bad this country is. I mean, look, I don't know, if you guys remember when I was a kid, when you were in public school, you pledge allegiance every morning. You don't do that no more.
Yeah.
There is no more, country, no more we. It's
civics.
Right. There's no
Yeah,
more.
we learned civics.
Yeah, we're in this together, and be proud of the country. We're not perfect for sure, but still the greatest country in the world as far as I'm concerned. So.
Okay, well, there is an aspect of socialism that I like. I'd like to socialize again.
You're right.
So I'm gonna get I'm gonna get the vaccine and be a guinea pig. Are you?
Probably you haven't read a lot of the history of real socialist countries. Because their people, instead of socializing with each other, were actually
enslaved,
turning in each other.
Right.
Yeah.
I was being facetious, but I would like to socialize again. So Len saying greatest country for what? Aha. The Han Chinese beg to differ. Okay, anyway, so let's get off of politics, and maybe you could share your screen, Joe.
Yep. Give me 1 second here. Yeah, I see.
Sure.
Okay, I got you.
Okay, so we're coming into the end of the year here, and what's on your radar? S&Ps. Okay, let's start here. So
Yeah, I have
we
this. Yeah, I have
go
this
ahead.
up right now. I'm sorry. Yeah, I have
No,
the ES up here, but you can talk whatever you want to talk about. I
no,
wrote it.
good. I want. So you think we're peaking up here?
Yeah, it's just a matter. I think if this pattern, if this pattern plays out, I can't see the future, but you can see,
Yeah.
it's a big zone up here. Usually somewhere around the 78, between 61 and 100. So 78, usually my 78.6 fib is usually my preferred spot. But I've been, I started a short already, a little underwater on it, but I'm holding my position small, and I'll add if it goes up. And the same holds true for some other, positions that I'm in. But the market right now, I think is top heavy. Put call ratios like extremely low, which means too many bulls on one side of the boat. And I think this is going to capsize, if not before the end of the month, probably New Year, like we saw last year.
Let me ask you this. I've traded these formations before. What, could be in a wedge. This is a megaphone line. What do you do when you get overthrows? And you know what I'm talking about. Say, for example, we gap above this resistance line. And,
Well, the trend line is just that. It's kind of to show you where the tops were. But the
Right.
zone here I'm looking at is the ABCD pattern here. So
Right.
D, it goes all the way up to 4,062. I don't know if it gets there or not. Like I was saying, I
Yeah.
think around 3,700 or so is probably going to be it. But
Yeah.
I could be wrong. Well, I'm not going to argue with price.
All
but,
right. Well,
that's what it is.
I'm just saying. In fact, one of my worst experiences was I kept adding on to a rising wedge, and then one Friday afternoon in the old days when the Fed Friday was a big day because of money supply. You probably don't remember that. And I walked into my house and I turned on CNBC, and I think Ron Insana was saying, "So how much higher do you think the bond market's going to be with the Fed cutting rates?"
Hmm.
And so, I knew it was going to gap this wedge line, and I see this happen a lot. What I teach is let it do whatever it wants to do on a throwover, and then back inside the formation, then it's a go. So, we'll see if we get an overthrow there. But yeah, look at that divergence down there, Joe. What kind of momentum indicator you're using? MACD.
Yeah, I use a
Okay.
583 MACD.
Yeah.
It's geared toward normalization. If you saw Bollinger's book on Bollinger's, normalizing your indicators can kind of put them in line with the Bollinger Bands. So I don't have Bollinger Bands on my screen, but the green line and red line are upper and lower, and the midline is a mid Bollinger Band. So I can
Okay.
tell based on my MACD that where the Bollinger Band is as far as price is concerned.
I see.
And, it works out very, very nicely. It doesn't always, result in a reversal, but when it's oversold like this, you can see, like we were back in February, March, you can see that we got a very nice bounce. So, we're kind of flat here, but price is going up, and so you're right. We do have a divergence, and this is just the weekly. If I go down to the daily, it's probably maybe a little more stark. You'll see.
Yeah.
So I'm, shorter term, I'm looking, 3,500 really is key. I think support. If we get back down there, whether it holds or not, we'll see. If not, we got this green support zone and then T1 right below. So that's my view.
30,
But
36 looked pretty important to me. That was a low that held Monday.
yeah,
So I think that's the first sign that I think we're going to start.
yeah,
caving
definitely
a
going to
little
pull
bit.
back. I think at some point. Look, nothing goes straight up, but if I have to get out of my position, I'll get out. But usually, like I said, I kind of take some paper pain because you can never, for me, trying to figure out exact top and bottom is just ridiculous. So I just kind
Well,
of.
I tell you what, be a classic event is that they patch together some kind of stimulus bill, and the market rallies that day on it and fades. Anyway,
Yeah,
I don't think they're going to be able to do it.
Market may sell off on it. It might be sell the news event. So
Yeah, that's what I mean. Maybe.
yeah.
Yeah. So okay, there's your view on S&Ps. We had a nice bounce in gold and silver after they've been correcting for a while. What's your view there?
Okay, well, I don't really follow silver too much, but for gold,
Okay.
I will give you my view. I think last time we spoke, I was telling you, let me go to the monthly chart. When we spoke last time, I was telling you this green zone and we did come back down. We did test it. So far, that zone is held. I don't think
Right.
we've seen the lows yet. I think we're gonna. This is just probably a dead cat bounce, and probably going to come back down. I think to the 1750s, or I think that'll probably be a buy. And if I go to the weekly, you'll see I got my C here for
Okay.
another ABC. So it just came down to just the top of that zone. I think we're going to go a little deeper into it. It may not get all the way to the trend line, but I'm looking for another pullback into the 1750 area. And if you go down to the
And that would
daily,
be a major buy, you think, for a rally to new lows if we hold down there?
well, if
in
we hold, I think we're going to get at least a decent bounce. Whether or not we'll go to new highs,
Yeah.
I don't know. But if it doesn't hold, I think we have problems. But the dollar it's interesting that the dollar has been falling and so has been gold. And so that disconnect there isn't going to last, in my opinion. One of them is going to be wrong. I think the dollar is going to be right. I think the dollar is going to turn up. And I think that's not going to bode well for
All right,
gold.
what do you see there? Because I don't have any divergences in the dollar.
Well, I'll show you what I have.
Yeah,
on my-
all the
on my
momentum
dollar
is
chart.
confirming the decline. I have lines at about 90. Okay.
Yeah, there's my weekly. There's my weekly
right.
chart on the dollar.
Okay.
And I have positive D on the weekly, and I have positive D on the daily. So I think we're
Okay.
coming into the bottom of the zone here. Now this 90 area has to hold. If not, we'll see 88, and we'll
Eight,
probably have a double
yeah.
bottom. I don't
Yeah.
know again if it's going to hold.
Why
or
do you
not.
feel constructive on it? Because it sounds like a bias because, I know you have some technicals, but, if we get to 88 and you say we'll probably have a double bottom, that kind of tells me you have a bias for
Well,
the
no,
long side.
a potential double bottom. If it doesn't
Okay.
hold, obviously it doesn't hold, but that's the last bastion of hope, I think, for the dollar bulls, because we break 88, then I think we're going to be in trouble.
Okay.
So,
Why? And is it all technical why you think the dollar is wrong on
well,
this
it's
decline?
it's technical, and it's also because I still think the dollar is the lesser of the evils out there. I mean, every country is debasing their currency, and you got to give the dollar the benefit of the doubt, being it's the world reserve currency, and probably still have one of the strongest economies out there. I just can't see the euro outperforming for much longer. That's my view. I could be wrong. Maybe something happens. Maybe this new presidency changes things, but
Mhm.
dollar wise, I just think it's hard to bet against the dollar. We're pulling back here, and I think I showed you last time my monthly chart, and
I love your
see
charts.
we've broken down. We've
Yeah.
certainly broken down, but again, we're still holding this pattern. Again, if 88 breaks, then all bets are off. But you can
Look
see
at
even
where
now.
look at where D is. If
Yeah. Well, we never
Wow.
got really above, but if we bounce, we get back above this trend line, then we could talk about it. But right now, you're
Yeah.
clearly bearish. We broke that 92 support.
Right.
Month isn't over yet. You see a little bit of a divergence here because you can see the MACD hasn't made a lower low.
Month is just starting. So if
Yep.
there's ever a chance for a reversal month, it's making new lows early in the month, and you have all month to reverse.
Yeah, well, like I said,
Right.
we'll see how it goes. But right now, this channel is broken, but the ABC pattern's still in play. So at least until 88 holds. So we'll have to wait and see how that goes.
Okay, so you trade cryptos? I'm not sure you. I think
No,
you may have
no.
shown- you don't
Cryptos,
look
I
at-
don't. No, I don't look at
Okay.
cryptos. I think if I'll show you, if I show you the euro,
Okay.
euro is probably a mirror image of the dollar.
It is.
See, so you can see
Yeah.
kind of the same thing. Again, there's a little room for higher.
Yeah.
But I think ultimately this divergence is going to play out once support breaks. The price.
That's so
leads.
glaring. I don't have anything that glaring. This is a weekly chart. Okay.
Yeah, well, this is why I use this kind of faster MACD. It kind of gives me better signals. I don't like that regular 12/26/9. I
Yeah.
think it's a little slow, but
Okay.
that's my view. I like it. I think I also look at COT reports, and I think
Okay.
some of the better buys right now, I think from extreme positioning by the commercials are long bonds, short soybeans, corn, and sugar. So
Wow. Yeah, because the public loves the beans. I mean, the beans has,
no, the beans are crazy. I think I
Yeah.
have beans here. I don't have a chart for. I don't
yeah,
trade corn
beans
and
in the
sugar. But
teen. How about, okay. What's that?
this
Sugar?
is this is soybeans.
Bonds. Oh, beans.
I'm
Okay.
sorry. This is soybeans.
Okay.
So I think we're at resistance here at the weekly. I should say.
The breakout, that'd be a gift to be able to buy it back down there at 960, 970, I think.
Right. And
Long
this is
term, I
just, you
think
know,
we've had a breakout.
yeah, no, this has been going up. I mean, but we're at that upper end here, you know, and I think we're going to get some type of pullback. And being that the commercials are so one-sidedly short on this, big money. You know, I kind
Yeah.
of follow those guys a little bit more, and you can also see we have, we do
They have
a
bigger
negative
accounts than
divergence.
you and I, don't they?
Oh, no
Well,
doubt, no doubt.
I
It's
mean,
not
you think
no.
they could take a little more heat than you and me?
Yeah, just a little bit. Not about me. Maybe you.
No, man.
You can come up with them.
No, I can't take as much heat as.
No, no. It's
I
not.
get
It's not a
migraines.
timing tool for sure.
Yeah,
But
yeah.
it just kind of gives you a guide as to which is really the longer term view. And sometimes it happens right away. Sometimes it takes weeks or months to play out. I mean,
Yeah.
beans has been a while. But
Let's
I-
look.
yeah, and I think I like. I'll show you. what I
Beans in the
think about
teens
bonds.
in 21, I think.
In the teens.
That beans in the teens in
Yeah, well,
21. That used to be a
maybe.
war cry at the Board of Trade. Beans
Oh.
in the teens. Okay.
Oh.
And they finally did it. I forgot about 7 years ago. They were trading 15, 16 bucks. So they could go there again.
Yeah, I think we're a little overboard here. And
Yeah.
here's my view on bonds. I think bonds are going to come a little lower. I'd like to buy it at demand zone. Or I already have a small position long.
Okay.
But I'll be looking to add if we can get that down to that demand zone. Because I
Okay.
don't think rates are going to stay where they are. And if you take a look at TNX, I think we're at the upper end of the pattern here.
Yeah. Okay.
And I think that this is gonna collapse.
So
'Cause
D could go to what? A little higher.
yeah, D can go to like
120.
what we got
30?
here, it's 1053. Well, 10 actually it's 1110. Upper end of D, but for TNX,
Okay.
there's the 10-year Treasury index. So
Okay.
I just think that maybe a little higher, which would bring bonds into that demand zone that I'm looking. And then of course this is a reversal zone, so I'm expecting rates to fall. Only because I don't not only the pattern, but I think from fundamentally, I don't think the Fed can afford higher yields. They're
Well,
going
the
up
U.S.
to-
government couldn't
Yeah.
afford it either.
No, that's what I'm saying.
And we've
They can't-
already had them double, right? They
Yeah.
have doubled.
Yeah, I mean, their interest payments will kill them. They just can't do it. So something's going to happen. I don't know, but technically wise, we're at that reversal zone for D, and that's what I'm looking at. And if I could, pick a low on bonds, I think it's a good long. And being that the commercials on COT are also extremely net long, I think that's a good sign. You don't want to bet against those guys. So, at
So,
least longer term.
most of the positions that you're talking about and forecasts seem like risk off to me because, risk off, get a bond rally, dollar rallies, gold declines again, and beans would probably come off during a risk off event. So
Yeah, no, I agree with that. I think that fits with my, my pattern here on this ABC pattern, because a pullback or some kind of reversal here, whether we get the T1 or not, is I think once there's a dash to cash, assets are going to get sold to raise dollars. That's going to boost the dollar, and assets are going to get sold off like gold and soybeans and things that are really moved higher over the past few months. And we'll have another reset, and that may be a buying opportunity.
yeah, maybe it's we've had a pretty good fall. We had a good summer, and fall ends December 21st. I know there are a lot of people looking at. There's some things happening, and astro-wise and everything.
The equinox or whatever you want to call it.
Yeah, it's the solstice, winter solstice. Yeah,
Right.
so We'll see. Anything else on the menu?
Uh, well, I actually, I think my favorite short is probably going to be small caps. I think
Okay,
a
because
rise-
everyone's
a rising-
piling into them. Okay.
Yeah, and a rising dollar is going to, I think, not be good for them. So that's my view on IWM right here. I have a short position currently right now. I'm just waiting for that 179 support to break, and then hopefully one or two of those gaps will get filled.
Okay.
And you
All
can see,
right.
yeah, we have the negative divergence, but we don't have price confirming yet. So right now it's just
Yeah, that just looks sideways.
Yep, just
Maybe
grinding.
one more spike. Maybe.
Yeah, could be. Could
Yeah.
be. You know, another divergent high wouldn't surprise me, but you know, we just gotta wait. I think the rest of this month's gonna be interesting and how we start off January. So you know, I
Okay.
certainly wouldn't be doing anything short term. I think, you know, 30 days out, anybody buying options, things like that. You know, my rule of thumb is usually try to buy like 3 months, 2 to 3 months out. I never buy when I'm using options too often, unless I'm doing like lottos or stuff like that for small short-term trades. But for
Okay.
futures, you know, you could manage your risk a little better. So it's a lot
With
easier.
what? The options on futures?
No, just regular
Just-
futures. Yeah,
okay.
options for people who trade SPY and don't trade the future.
Okay.
You know, it's
Okay.
a little bit difficult to
Okay.
to manage. I find anyway. It's not my
You have
thing.
someone's requesting a NASDAQ chart. Do you have one?
Of NQ.
Yeah.
Yeah, I thought I posted it before, but yep, there you go. This is
Okay.
the weekly.
It finally made a new high.
But
Okay.
you see it just breaking the 50% fib, whereas ES is already into the 61.8. So
Right.
NASDAQ's been kind of lagging, believe it or not, but they're
And
starting
now
to
it's
catch up.
catching up. Yeah.
Right. So now when when they're both in this reversal zone for D, you know, I think gives you a little more maybe confidence that we may be topping when you got all the indexes up here.
Okay. Well, Joe, the best way for people to follow your excellent technical work is Twitter at Joe Friday 714, or anywhere else you could direct people.
Yeah, well, that's it. You know, right now this is my my handle here. If I could find it, there it goes. Joe Friday at 714, and
Don't forget the underscore before
yeah,
714.
don't forget the underscore, right? And that's it. If they want to follow me there, and
You're going to get a new hat for Christmas.
I like the old one. I'm
All right, Joe. Thank you
All right,
so
my
much.
friend.
Yeah, thanks for coming. Have great holidays with you and your family. Hope you guys all stay healthy and all your trades come home for you and your followers.
Thank you, and same to you. Good, best of luck, and have a great holiday to you and your followers and your family.
Thank you so much. Joe Friday, everyone. You could find him on Twitter at Joe Friday _714. This guy is you have a great calm demeanor when it comes to things that make people very nervous. So
Yeah, well, no one likes to lose money. I think that's probably
yeah.
half the people's problem in trading is that they get scared out of trades when they shouldn't be. But
yeah, so when you're working with someone with a calm demeanor, it really helps, and Joe's got one. So thank you very much, Joe.
All right, my
Appreciate
friend.
it,
You
buddy.
take care. Bye now.
All right, my trading warrior brother, Joe Friday. That's a wrap, everyone. We'll see you for NFP tomorrow. Good luck the rest of the session. And that's going to be about it. You're welcome, Hugo, Nyan, Ben, George. Take it easy. See you tomorrow. You're welcome, Tom.